Let's tackle our multiple choice questions for corporate net operating losses and capital losses. Starting off, when should a corporate taxpayer elect to forego carryback of a net operating loss and instead carry the net operating loss forward? This question, I don't know if it seems complex, but break it down, think of it simply. When should you not carry back a loss and when should you carry it forward? Now, before even looking at the answer choices, I'm going to think about that. Well, if you've got more obligations, more future tax liabilities likely in the future, I would say that's a great option. If you paid less taxes in the past, then I would not bring it back to the past. Now, generally, taxes will go up over time as tax rates increase, as inflation happens, as prices go up. So generally, you'll end up paying more tax in the future. Now, that's me kind of going on a little bit of a tangent there, talking about how the real world works. But in this case, yeah, let's think about that as well. If we should instead carry it forward, we would want a situation in which we're going to have a lot more taxes in the future. So first option here, when the taxpayer expects net operating losses in the future. Well, no, if we have operating losses in the future, we're going to use those operating losses when we have them, and we wouldn't want to carry this forward. So I'm going to cross off letter A. When the taxpayer has low marginal tax rates in carryback years, meaning we had in the past low tax rates, meaning we had less taxes, and we expect to have higher marginal rates in the future. Now that sounds like a pretty solid answer because it means that we likely didn't have a lot of taxes in the past. We're expecting to have a lot more taxes in the future, and as such, we would like to carry forward the net operating loss rather than back. So I'm going to leave this as a possible answer. It sounds pretty solid, and it looks like this is the opposite. Just the only difference is here: high rates in the past, low in the future. So I would cross this one off because again, we are not going to want to carry forward this net operating loss. If we're going to have less taxes in the future, we're going to want to carry it back. And last possible choice here, when the taxpayer expects lower rates in the future. Again, this is kind of just saying the same thing. We have less taxes in the future, so we wouldn't want to use our net operating loss in the future. Final answer here is going to be a letter B. Diving into our next question, we've got a C corporation that incurred a $438,000 capital loss in year 4. We see that right here. And we've got the following tax information. What amount of capital loss is available for carry over into future tax years? Great question. Now, first, before we begin, let's write out our rules. For our capital loss carry forward and back rules, we can carry these losses back 3 years and forward 5 years. Now, this particular rule will not apply because, well, if we see back 1, 2, 3 years, that's all we've got for information-wise, and we don't have any forward years. But that could apply to a particular question, so make sure you are thinking of those rules, because if we've got years 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and it goes on, then yeah, this may apply. Or if we've got year 0, then we wouldn't be able to take from year 0. Now, what are we going to do here? We got 438, and we're going to look backwards to offset these gains in prior years. 438, now we can offset this 11. That sounds good to me. Now, what about this 21? I'll give you a second. Why wouldn't we be able to just take this 21, the full amount? I'll give you a second to think about that. Going once, going twice. Well, there's a trick here because the amount of capital gain that you can offset from prior years is actually capped at the taxable income or loss. Well, not loss, it'd be capped at the taxable income, which here is 17. In year 3, it didn't matter because the capital gain is significantly less than the taxable income. But here for year 2, we had capital gains in excess of taxable income. So as such, we're going to actually be capped out at the 17,000 here. So instead of being able to deduct the 21, we have to deduct the 17. And here's where we would get tripped up between answer choice A and C. Because if we fell for this and we didn't account for the 17 and said the 21, we'd get to 406. But because we are capped at the 17, we are going to get a total answer here of $410,000. And that's it. Another one down in the books. Make sure you're practicing questions, sims, all of it. You're going to do well. Keep it up, and I'll see you in the next one.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.